Good day, fellow investors. I was totally wrong on PayPal. It is a stock to buy and it will 3x. So a few days ago I said I will not do any more PayPal stock videos because I said the stock is too risky for me and that I don't like this management desperation buybacks. I was wrong likely on the buybacks. I was wrong on management compensation. They will never do any compensation anymore. And there were so many comments telling me how I was wrong. The valuation has the risk stock quite a bit. Now we are at a valuation of 15. Okay, compensation is bad. Everyone is doing, Google is doing, everyone is doing. It's just a matter of time before it will rip again. I didn't discuss the ads, which will be a very, very big thing when it comes to margin. They hired that guy from Uber. So I don't think this video is going to age well, says Mario with a nice lampuga here, or how do you call it, mahi mahi vahi vahi in the US. I hope so for all those invested long and telling me how stupid I was. And I already making a video now to say to you that I was clearly wrong. Stock-based compensation is done by Google, much higher than PayPal, it has no debt, it keeps on growing, strong free cash flows, and of course attacking Sven. Sven prefers to buy Nigerian nickel mines with 3 cents in cash flow per year. I don't remember buying Nigerian nickel, but okay. So many comments discussing new management, new compensation plan, the stock has to go higher. Of course, when you disagree on a stock, there is attacking the messenger, superficial, not helpful, not the kind of analysis I expected from Sven. Here also half-baked, non-info, just clickbaiting. And also Vladimir here asking, why no more videos? Because just it's too risky. I'm not implying PayPal is toast. I'm just not liking the risk and reward. And yes, there is much more upside potential than downside potential. That is a universal truth. Upside potential is 5x always, and downside potential is a 0. So there is always more upside potential than downside. That's the nature of investing. But here Borat discusses WebD, Intel, PayPal. We'll see whether they end up as value or value traps. Some will turn around, some won't, and I am not trying to be right or wrong. That's the message. It's not a video about PayPal. It's about being right or wrong. The thing is that I don't know whether one can be right or can be wrong on PayPal. Yes, the advertising can work. Yes, they can have these new ventures, Venmo, etc., that can work. Do we know now whether those will work or not? No, we don't. And only time will tell whether those will work. Therefore, as all the money is being spent on buybacks, thus reinforcing the thesis that that has to work, that simply increases the risk. So I have, it's a bet all or nothing they are doing with the buybacks, versus if it doesn't work, then nothing is left, not much. If a business like this starts contracting, then the 5 billion in cash flow go to 4, go to 3, go to 2, and then somebody might take them over, but these days not even. Not even, because if the cash flows are gone, only miracles, but then you're already 50% down, and that's not something you want. So I'm just discussing the bear and bull thesis. Do I like it for myself or not? Do I have better? If I have better, there's nothing left to do, because value investing is about minimizing those risks, and all that's left is upside when you minimize those risks. And to further discuss 1979 Warren Buffett letter, both our operating and investment experience cause us to conclude that turnarounds seldom turn. I'm not saying PayPal is a turnaround, but it has flattened, it's not the company it used to be, and now there is more and more competition attacking, and now we have to see if they can reinvent again the company for growth. And that's again something that it might happen, it might not happen. I hope it happens for all you that are long, but it's just a bet I'm not willing to take. So I'm not saying PayPal is bad or PayPal is this. PayPal is PayPal. It is a company, it's doing business, it's trying to grow, it's doing its best, but the key is whether it fits my risk and reward situation and whether I have better. And if we go to Berkshire acquisition criteria, let's put PayPal through this. Large purchases, yes. 50 million, they are doing 5 billion, so Buffett could buy them. Demonstrated constant earning power. Future projections are of no interest, nor are the turnaround situations. Now, this is where we already can discuss. They are doing their 5 billion now, but all else equal, the core business will start seeing that trickle because it had a great position and now it will go a little bit lower. This is okay, little or no debt. Management has just changed. Thus, we are seeing this trickling down and then ideas here to change because they are trying to save the business from this going down. So the management is now new, has to reconfirm itself, so we are not really there. It's a simple business, if that's lots of tech, so not really that simple because we don't know where it will be in the future and we don't have an offering price to buy PayPal now as Berkshire. So where will PayPal be in 5 to 10 years? It could be great, but it also could be disappearing. That has happened many times in the past. Anything could happen. And yes, hiring this guy, hiring that guy, there are still not yet great confirmations that it will start getting traction and going forward. As Peter Lynch says, a cyclical is best bought 2-3 quarters when things are improving. So if the bottom is 60, the lowest risk buy will be at 90 to 150. Not now at 60, but now at 60 it can go to 30, can go also to 90. But when things are really improving, as the comment said, when things will rip up, that's the best buy there. But again, just not for me. So no hard feelings, I hope. I didn't attack everyone that's long. I just said why I will not look into PayPal anymore, no matter what happens. So this video was not about PayPal, just about the risk and reward and how it fits one. Thanks for watching. I'll see you in the next video.